All right, team, welcome back to After Hours. You guys are going to want to stick until the end. We have a lot of value for you today, and we are going to be breaking down maybe some potential assets you should consider adding to your portfolio if you haven't already, because we are going to be looking at some of the best RWA cryptos that you could probably add to your portfolio right now, as we are still seeing some great value zone buying opportunity on these cryptos. So you're going to want to stick until the end. I think it's going to be a phenomenal show. We're not going to particularly be talking about like XRP or Hedera. We might at some point actually talk about Hedera, because Hedera is a great example for some of the things we're talking about. But we're going to be talking about a grander picture of some of the assets we care about a lot and how this could be used, the blockchains itself be used for tokenizing real world assets. So team, stay until the end, Maddie. But before we get into the show today, I think it's important for the team to know, especially the newcomers, to know what we have going on at Crypto Charge. So Crypto Charge, the education platform, click the pin link down below. Maddie, what's going on at Crypto Charge right now?
Yeah, Crypto Charge guys, we're just an ever-growing community. When I think that we've kind of maybe plateaued on what kind of group of people are interested in our program, we get a whole new cohort of people that come in, and it's always exciting to me. It keeps me going. It keeps me excited. We do live updates Monday through Friday there. That includes a Tuesday update from my business partner, Dan Habib, an expert in the macro field, teaching you guys about inflation, what's going on with the Fed, how that affects your investing. We look at the charts. We have the coin library for entries and exits. We have our learning center with a plethora of resources, including the consistent investor strategy, teaching you guys our entire investing thesis, as well as the Discord. You guys can ask questions, interact with each other, all at $49 a month with code YouTube and a 30-day free trial. If you guys do not use code YouTube, though, you will pay $99 a month. You will not get a free trial. And that's a bummer, right? So let's make sure you guys get all those benefits and use code YouTube.
Absolutely, Maddie. Team, very excited to get into the show here. And I want to start out with maybe some examples, because maybe you guys don't fully understand why tokenizing real world assets is important. So I want to break down a quick example, and then we'll get into some of the more definitions so that you can holistically understand tokenizing real world assets. And then we can break down how this works in reality, how it's working in actuality right now, and maybe some of the best cryptos you could be buying right now to set yourself up for this big projection in 2033, which will greatly impact the price appreciation of our cryptos. So let's look at like maybe a Rolex watch, all right? Let's just say a Rolex watch that goes for $10,000, right? And let's say we issue 1,000 tokens for that Rolex watch. Well, if you buy $10 of tokens of that watch, you are able to hold a portion of that watch. It is under, so you could say, Matt, hey, I own a Rolex watch, but you only own a piece of it. And this might sound silly to you, but just think about how this works in reality. You could hold not just like a set share of tokens. You don't have to hold, one or two tokens of this Rolex watch, but you can not hold the whole number, but you can hold fractions. You can hold 1.5 tokens of this Rolex watch. So it becomes a great fractional piece. And if you use that idea for other endeavors like real estate, Maddie, you've talked a lot about fractionalized real estate. How could you foresee that playing out for someone that maybe doesn't know about the idea going forward about how we could kind of chop up a piece of property so that multiple people can own a home, a building, an amusement park?
Yeah, definitely. And like you mentioned, it's not just about residential real estate. There's a lot of different kinds of property that you could potentially have fractional ownership over. One of the more common vessels for people who don't have, let's say, all the money to be able to put down on a full property they own, or maybe they don't want to have all the responsibility of maintaining the property, is REITs, so the investment trust. Sometimes we'll have multiple properties in a portfolio, and essentially, of course, over time, the value of real estate generally goes up. So you can do well in those portfolios without having to do all the research and liability and all these different things. But what we're going to most likely see over time is, I think one of the big things are probably going to be more like condos and apartment buildings and commercial real estate. Those are probably going to be some of the bigger initial offerings that we'll see through these tokenized offerings, because what we're still going to need is bumpers, right? Bumpers in place to make sure that the average investor who doesn't know anything about investing truly understands what they hold, and they think that, oh, I've got a 100 share of XYZ property. Well, that means I can go stay there 4 times a year, right? Like, it's not a timeshare, and there needs to be a certain set of disclosures that are given to everyday investors, because what we're also going to see is a lowering of that barrier to entry for participants, right? So instead of having to be make $250,000 a year and have all these different things, someone who makes $50,000 a year might be able to buy a few shares in a very large condominium complex, or like you mentioned, Gavin, even as far as like an amusement park, right? Maybe you want to do some bootstrapping for that, some bootstrap funding for that, and you potentially own it without being an accredited investor. So I do think that there's a lot of excitement to it. There's obviously going to need a lot of regulation on the backside so that the industry doesn't crumble, because if you let the technology move too fast and we don't get those bumpers in place first, that's when you start having problems, right? That's when the fraud sets in place. That's when you have people who don't understand that there are certain people who are qualified to actually issue these things. Even rolling back to what you said about like the Rolex watch, right? It's great that we can have like an assay and a certificate, and we know that it's, it truly is there, but we also need services of people who are custodying these that have insurance, and you're not just having some guy in his basement that's like, oh yeah, this is, whatever, a 1990 XYZ Rolex watch, and it's worth this much, but it's really a fake, right? But nobody, did the authentication behind that. So we need a little bit of regulation in place to make sure that we have customers who know what they're investing in, know what, when you do have things that are tokenized, because just because they're tokenized doesn't mean that they can't be securities. You can have securities that are tokenized on the blockchain, and that's okay. It's not a bad thing, but it is a very different type of investment. So lots of exciting things, but also lots of little pieces of regulation that need to come into play to make sure that it's a smooth transition and it doesn't, give the industry a black eye when it comes to the technology side.
Team, while Maddie was talking right there, you might have heard a change in how his voice was being audibly sent to your ears right now. We were trying to figure this out, Maddie. Remember last week we were trying to figure out like something was going on with the audio, and I just went into the settings in our software and it was screwing up both mine and your audio. So that was just fixed in the middle of the show right now. So team, we finally, I was trying to figure that out over the weekend because something changed last week and it was an update for our software and they just screwed up our mics. But I think it came through all right. So just to keep it going there, I just want to throw that off because Matt, your audio changed in the middle of there. The summary there of tokenizing real-world assets is pretty straightforward. It's offering illiquid assets. You could get fractional value of them. Of course, like Maddie said, the lower barrier to entry. I think I like the stance of, hey, if you're a poor man, you can buy more. If you're a rich man, you can buy more. If you're a poor man, you can buy less. Just kind of exemplifying, hey, it kind of meets you where you're at. When people talk about how expensive housing is nowadays, well, now you can go in and buy a fraction of it. So if you want to get a single family home, well, you can hold a fraction of the home. You can own a home, but a fraction of it, and then someone else can, and then you guys maybe split it up. Like that's something I could definitely see in the near term, but this gets more complicated on the back end and shouldn't be as complicated for you to visibly see. If you're working on a software on your computer and you got to pay your mortgage payment, well, are you going to go to your other tenant and be like, all right, give me your money? It's like, no, you guys could both go to your software and pay it like you can today. But it can be done on the blockchain, which is immutable and auditable. So those things could be clearly transparent. And you don't even have to know all this, Matt. That's the beautiful part, is this could be all done in the background. And so when even we get into like Larry Fink talking about tokenization, he's talking a bit about it on a grand scale for pretty much anything. And I want to read a quote because I was telling you, I couldn't find a good quote from anyone, so I just made up my own. I said, just as crypto has empowered investors by allowing them to purchase tokens and fractions of a network, tokenized real-world assets will enable us to own a fraction of anything. And that's really the truth. You can get physical items like gold and diamonds like we talked about with Hedera, or you can get non-physical items and like art, online art that we've seen in the past that have been popular in previous bull runs that may not necessarily have a real value unless you're buying like a Gary V NFT where you can go to a particular restaurant. So it's really up to the investor, and I really do like that. But Maddie, there is kind of some worries here. You got to bring in regulation here, because in the past couple of weeks, if you guys have watched our past couple of shows, we have really laid out a good picture for you. Examples of compliance and regulation, KYC and AML requirements, and how institutions need to meet these requirements. And how are they going to do that? Well, they could do that on something like Hashfair, which is a Hedera-powered institutional private blockchain that can be utilized where they meet compliance and still operate tokenizing real-world assets. And that could be a solution for many out there. It doesn't have to be such, they're on this blockchain and we all get to see it. But no, maybe it could be happening in the background and we just verbally hear what's going on with a company, an institution that's working with a blockchain. And there needs to be compliance, and this is a big problem. This is one of the things, I don't know why I keep quoting the Larry Fink quote. We'll get into it in a second, but he was just talking about some of the hurdles, and one of the hurdles is regulation. And so this has to be a thing going forward. And this is where, again, watching our past couple shows, we've talked about Hedera. While this is a ongoing endeavor for them, where they realize the future must be compliant. It's not decentralized where it's a free for all and it's the wild, wild west. These institutions have to feel safe to operate on these blockchains. And so I think that kind of exemplifies what we're talking about. And again, talking about like what Maddie said with real estate, you don't need an $80,000 cash infusion to get into or to buy a property. You can come in with little money to buy a home. And so, like Maddie said, that allows for more participation, for more people to get in. Look at crypto and how revolutionary crypto is for your regular person out there, where they don't have to buy a certain amount. They could buy any amount, and it can just sit in their Coinbase account.
Definitely. And I think that's a conversation that I'm maybe having a little bit less these days as people are becoming a little bit more aware. But still, I would say there's a big portion of an older generation that has never touched crypto, hasn't done any investing. They know about Bitcoin. They heard about Doge. They've heard about maybe a couple other, bad coins out there like Haktu or whatever, just through the headlines, right? But that's kind of their limited knowledge. But still, we talked about it. They're like, well, yeah, I really wanted a Bitcoin. I just couldn't afford it. I'm like, what do you mean? Like, so we're still getting to that point where people not realizing that you can buy fractional pieces of crypto is a reality. We've even seen also with Robinhood that they're allowing you to do some fractionalized purchases of shares of stock, if I'm not mistaken, as well. So we're really lowering the barrier to entry. I've never understood why we've never always needed to sell whole shares, right? Like just sell micro units if that's what people are interested in. But it also allows people to actually get a start, right? Like a lot of people will talk about, even with like our, with making money, once you make your first 100,000, then, everything after that is easier, right? Or once you make your first million, then everything's easier. But really it's a much smaller number than that, right? Like you get your first $10,000 in the bank. It's not so much that $10,000 is going to change your life. It's the fact that you have actually built up to a point that you thought wasn't possible before, and it inspires you to actually do more, right? So same thing with the ability to buy smaller pieces of crypto, real estate via fractionalized shares, whatever, luxury goods like watches. It gets you a start, and it actually helps you to earn a little bit of interest. You start to see that growth, and it motivates you to keep going, right? So again, I don't think that that's the bigger, grander scheme of what DLT and tokenization has to offer. But those are some of the things I think about of like, do we get people more excited about investing because the barrier to entry does not feel like the Great Wall of China?
Right. And so this is where, that whole conversation kind of leads us into maybe one of the big featured stories of today, with this new estimated growth in tokenization through 2033 here. And so what we have here is tokenized real world assets are projected to grow from 600 billion or 0.6 trillion in 2025 to 18.9 trillion by 2033 as blockchain adoption accelerates across global finance, according to Ripple and Boston Consulting Group, or BCG. So this is actually pretty crazy, Matt, because when you look at this chart, you see we are not even a third of that number in 2033. So we're looking at exponential adoption here. So we're in the early phase of this adoption curve. So this gets me excited, as we'll show later, as what should I be getting into, and one of the things is you can buy the underlying asset, like Matt said, buy the network asset, buy algorand of the algorand network, or buy the HBAR token of the Hedera network. But the next step you have of this, just thinking about tokenized assets itself, is look at what they're projecting in 2033 to be the most tokenized assets. You're looking at equities, you're looking at real estate, and maybe some other alternative investments. Maybe that's like gold or diamonds or whatever they have under there. But the two being equities and real estate. And so, Maddie, what would that look like for an investor, in 2033 when they go to purchase equities or go to purchase real estate? Like, put on your tinfoil hat cap, and how could you imagine that scenario playing out?
One of the things we're going to see is finality. So obviously with stocks, it's like T+1, so trade day +1, or sometimes T+2, so trade day +2. Before you made the purchase, you acquired the price, but you don't actually have full custody of those assets for 1 to 2 days. And those timelines have gotten shorter. But when you truly have instant finality, that allows you to have a little bit more flexibility with those assets. It also takes the transfer of those assets. So if I want to gift or sell stock to somebody else that I know directly instead of selling it, on exchange, I can do that instantaneously, and the other person knows that they have that instantaneously. So if I wanted to, I could more easily trade shares of Disney's for a vehicle or whatever I want to, right? It creates marketplaces that are far more liquid. With real estate, right? If you guys have ever bought a house, or if you guys are not in the real estate industry, there's so many components that are very slow, and a lot of them being tokenized can speed things up. If you are able to have seasoned USDC that immediately goes into a smart contract, and you have title that's verified as an NFT, and that goes into the contract, and we already have all these other parameters, a home inspection report that has blockchain, a say to it that goes into the smart contract. You now have a very quick collection of verified documents that anyone can go in and verify. That it essentially speeds up the process. Another huge, very stupid thing, it's 2025. You can't close escrow on a weekend right now because you need the bank to be open. You literally have to wire your money into the bank, and they do not let you do that, or they won't clear it until we see it over on like a Monday, right? So basically you have, a ridiculous number of days out of the year where you literally cannot close business. So imagine how much more quickly the space can move with verified documents, verified assets as NFTs, smart contracts that automatically execute and remove a whole bunch of stupid human error, right? It accelerates the escrow process and allows you to close any day of the week, any time of the week, because you can have assets that are not dependent on third-party intermediaries. That to me is a very, very powerful future. So whether we're talking about stocks, again, settling stocks 24/7, the stock market will now be open 24/7 once you tokenize securities. There's no reason for them to be closed. The big reason why they're closed is because banks settle, right? Banks are making those settlements, and they also close at the end of the day, right? If you guys think about the way that the stock market is opening, closing, it's all based on the New York financing. We're all praying and waiting on what New York is doing so that we can do business again. We won't have to wait on New York anymore. We will be worldwide trading 24/7 without waiting on those intermediaries.
Great breakdown there, Matt. And so now I kind of want to move. I think we laid out the case. I'm gonna swap. I'm gonna leave Larry Fink's quote after this because I think that'll be some good concluding before we maybe, if we have time, go to the charts. But I want to go to this website that kind of shows every tokenized real world asset in one place. That's like their tagline there. And so what you see is on-chain real world assets is 20 billion right now. And let's look at some of the networks that are contributing to this. So you have Ethereum, and this is going by total value here, top to bottom here. So the most value on-chain of tokenized real world assets, top being Ethereum, and then you have ZK Sync Era, which is a Ethereum L2, and then you have Stellar, Algorand, Aptos, Solana, Polygon, etc., Arbitrum, all the others here. And so, Maddie, if we're looking at buying the future, and if we're looking at making the most here, thinking about our price appreciation, putting on our investor cap on, when we look at the charts and we look at value zones to buy, there's a couple of these that are, one in particular that you've been really talking big about, that are offering good buying opportunities right now. And so if we were to capitalize on a couple of these, what would that look like?
I mean, if you guys have been following for any minute of time, you can peek at this list and you'll know that I've beat the algorand horse till it's just about dead. And I'm sorry, but I'm not sorry. I'm trying to give you guys the opportunity, right? Because I feel like I talked about XRP and HBAR so much when the prices were great. And we just aren't offering great opportunities on that, right? And I've talked about algorand the whole time, but I obviously really put my focus where I felt like I had a lot of interest, a lot of research dialed in. So algorand is still on this list, offering some of the best opportunity. Again, if you guys want to take a quick look at the algorand chart here, it's still in that purple value box. And if you guys have been watching the show, these value boxes, once they're presented, my team knows to just get in there and to get to work. If it is something that makes sense average-wise, portfolio-wise, and risk appetite-wise, they get to work. And that's when you see these big double bottoms in here, and then you start to see the breakouts, and then you start to see new floors being developed in here, and you look at that risk to reward, and even up into some of these imbalances offering a 4x, 6x, and maybe even like a 7x without even breaching a new all-time high. That to me is a no-brainer trade, right? Those are easy trades. And of course, when we look at algorand, and we look at even obviously some of our much bigger targets, we always just give our team trim options because some of our team members have quite literally hundreds of thousands, if not millions of dollars in the market. We want to make sure that they have opportunities to de-risk on the way out. 1.618 gives us maybe a 22x up into that 450
Mm.
mark, right? Those are huge opportunities. Now, the other one on the list that, again, I wouldn't say is really, really great risk to reward, but I know some of you guys are still like, I don't care. I want the large cap. ETH has been beat up super, super badly in here. And I think that ETH has become I never thought this was going to happen, but, the stepchild, right? Like the child that nobody wants, whatever, black sheep of the family. But now we're seeing like almost a 3.5x from current market up into that 1.618. Now, again, is that absolute best compared to even algorand looked at? Of course not. But if you want diversification, maybe upwards of almost a 10x up into that 4.236 if we saw something really explosive in here. Now, of course, ETH is a bigger market cap, but I think people are so hyper focused on Solana and everything else that did super well because of the meme coin run that they think that ETH is dead, right? And again, I'm not a huge ETH fan. I think it's still kind of expensive. I think it's still kind of slow, but there's a lot of building being done on it. Obviously, the data speaks for itself here. We see a lot of RWA tokenization, which is, it's excellent to see. As you guys also know, like, I'm not tribalistic. I'm pro technology. If we get more stuff tokenized on Ethereum and then other chains see that, hey, at Bank of America, we tokenize something on Ethereum. Have you checked our network? We do it 10 times faster and we can do it 10 times cheaper, right? And then you start to get more competition in the space. It's a good, healthy thing when you see that. So love to see that. Last one I would not recommend buying price right now is obviously XRP. But if you guys didn't read, Brad Garlinghouse did a great write-up. Ripper just acquired for just under 1.3 billion Hidden Road. And they're basically like a $3 trillion a year clearinghouse. And they're going to be utilizing XRP, RLUSD to basically tokenize and clear all kinds of payments. And that's very exciting. So I think you'll see XRP creep up on that list very, very quickly here. So again, guys, there's a lot of opportunity out there. I think another set of opportunity that you guys are going to see outside of buying just crypto as itself, as like I just mentioned, you're going to see more RWA, more real use cases. You're going to start to see more companies pop up and they're like, okay, great. We know how XRP works now. We know how algorand works now. Here's a program for real estate, for luxury watches, whatever it is. And those platforms need to have customer service, right? And they need to have, fees to be able to, keep their business profitable, storage facilities to store some of these items if we're talking about luxury goods. And investing in some of those startups could be very profitable adjacently investing in crypto in itself. So you guys are going to get more opportunities than just digital assets as the years go on, as more competitors pop up offering customer-facing solutions and not just the raw tech.
Mm-hmm. Team, one of the things, so I knew we were going to talk about tokenized real world assets today, and I really wanted to bring to you guys maybe some avenues that you could take advantage of right now. But the fact of the matter is there's not a whole lot of options out there unless you're doing something like this counts, tokenized fiat. You got your stable coins, you can earn an APY on it, which is like very simple. But let's talk about real estate, which is something I know you guys are probably eager about from the days of talking about property. And then there was something of these past couple of years, Lofty, that is powered by the algorand blockchain. And so when you hear that, that sounds exciting. But when you actually look at the interface, it looks a little sketchy. You can see it's not regulated. They're not following precise practices. I think they're meeting like every prong of the Howey test, which classifies as security. And there's no real way for you to buy fractionalized real estate right now, especially with this Lofty tool. So I'm bringing up this Lofty tool as an example of what not to partake in, because with this Lofty tool, I might even show the example of the screen right now because it's so interesting. Just do it on the fly here because I was looking at it and it looked interesting. But the problem is I saw all of the reviews on it, and it was not something that could actually be done right now because when you bring your money on or take your money off, you're paying like a fee. And then when you try to get into here, like on this Glen Road in, what is this, Michigan, Shelby, Michigan, you also have to think about like the token itself being diluted, which is something that's difficult to kind of rationalize because you look at this yield and it's like, oh, this makes all the sense in the world. But your tokens are being diluted. You're putting upfront money for fees to even partake in this. But the things that the math isn't mathing because you're going to end up losing out in the total grand scheme of things. But I just want to talk about quickly about what this could actually look like because they show the offering details and they like to pull out this guy Mark Johnson as like the go-to guy. Apparently he won like a Forbes 40 for 40 or like one of the top 40-year-olds in Michigan that you should be watching of, business person of the year type guy. And he transferred his property's deed to a new LLC and is selling a portion of that LLC on the Lofty marketplace. And this property is the only asset owned by the LLC. So you could partake in this by with your $50, $46 starting price. But then I went to the reviews of the website, and it's all one-star reviews.
Awful.
Like, it's all one-star reviews, and it's completely and utterly a scam. And you do have your boomers in here that are like, oh, I can't take my money out. And they respond like, oh, you have to sell your assets. But there was one quote in here I wanted to say. Maybe I deleted it. Maybe it's in here. But Lofty is just a marketplace with no real protection for buyers, which there needs to be protection for buyers. If they're not compliant and they're not SEC regulated, I mean, you're just playing Wild Wild West right here on the max level. And, the math that I saw worked out by Meet Kevin doesn't even make sense, because he was breaking down like this is like one of the biggest scams people are trying to capitalize on right now, because you hear Larry Fink talking about tokenized assets and real estate being one of them, and then first thing they want to do is go look for opportunities like that, and they land on something like Lofty. And the problem is you hear, oh, it's powered by Algorand. But then you go and look at the people that are actually doing it. They can't really they're struggling to get their money off. They're struggling to even invest. They're losing out on their money. They're getting like a quarter back on their money. It's not month over month profitable. So it doesn't even make sense right now. The foundation stone, though, is when we're talking about like some of the descriptions of the offerings, like, okay, selling a part of your LLC, holding 10% of it, allowing people to buy tokens to partake in this. All of a sudden, you have governance votes on what we're going to do with the property of every aspect of the property. That could be the price of what it's listed at. That could be, if we add something to the property, if we're going to add a pool in the back, if we're going to add a brick wall, maybe hoping to appreciate the value or add some value to the property so that it could be more valuable when getting appraised. So those are just things that we could see happen in tokenized real estate. But unfortunately, Matt, there's just nothing really on the table right now for people to partake. And I would like to go back and look at Proppy, because this Proppy is very different than Lofty, where in Lofty you can buy tokenized shares of a property. And I think only with Proppy you can just go in and look to buy a property with crypto, which does look good. You can go in with your USDC and buy a property in Miami or in, they're working in a bunch of, I think, like 7 or 8 states right now, which does sound like a lucrative opportunity. But Maddie, unfortunately, we're just not there yet.
Definitely. And what's happening here is like there's a disconnect, like we talked about, between regulation and technology. And I don't blame people for trying stuff, right? But they also are very aware that the missing piece here is the NFT. If the title for the houses were tokenized and minted as NFTs, this would actually be a much more straightforward process because the offering would be more clear. But really what's happening is you are, to some extent, almost selling an unregistered security, because you have the LLC, which is fine, right? That owns the property, which is also fine. But you're offering tokens that don't actually own direct ownership in the LLC, but that's technically what you're selling is a fractional piece of the LLC, but you're not. Because if you go to look to see who owns the LLC, it'd be one person and one person only, right? You would never see yourself as a partition owner in there. So that's the disconnect here, that the problem is, but it doesn't mean that it can't be done with the right regulation. You have regulation that says, yes, houses can be minted as NFTs. Here's all the elements need to be present in order for it to be a valid NFT. Fantastic, we're good to go. That's the disconnect here, is that you don't actually own a piece of the LLC that owns the property in itself. That's the problem.
Exactly, and which is meeting you're meeting prongs of the Howey test, and you're talking about collecting rent. I think you're meeting the 4th prong of the Howey test. So very bad right there. And so, team, do not partake in Lofty right now. I know you might hear Algorand, you might hear other names that are attached to these opportunities that you can buy fractional shares of whatever asset. In this scenario, it's real estate. I am saying do not partake on this. I do not want to hear we brought it up and we glorified it and then you guys partake and lost money. Okay, I've seen people time and time again bring something cool onto a show and then they don't share the risk of it. And there are a lot of risk if you partake in Lofty. So do not come back to me and say, oh, you guys touted it, you guys glorified it. I was like, no, I was using it as an example to show how fractional real estate, you could partake in that. Not as go partake in Lofty, because it looks like a scam right now. You're not going to make money, okay? Last thing I wanted to wrap up here was a article released by CNBC reporting on Larry Fink right now. Here we go. Tokenization of the market from stocks to bonds to real estate is coming, says BlackRock CEO Larry Fink, if we can solve this one problem. And so this was released a couple days ago, and Fink says that he's envisioning a financial future where all assets from stocks to real estate are tokenized and traded instantly on a blockchain, revolutionizing the global markets with 24/7 availability and near instant settlement. So I think you have a couple things here that we need to consider if we're going to use a blockchain. So 24/7 availability. We also need to tokenize the assets, global markets, near instant settlement. So 24/7 availability, near instant settlements, and what could be the third one here that he's listing out on? I think I had a note of this somewhere. I don't know. Maybe it was in my book here. But there's certain prongs that you need to meet in order to blockchain, to order for a company, an institution to be like, all right, we're going to tokenize assets on that blockchain, right? We want it to be fast. We want it to be near instant finality. We want to be on a blockchain like Hedera or, XRP Ledger or Algorand, where it's, 3 to 5 seconds final right there. And also, too, needs to be 24/7. Oh, what about these networks that have gone down a couple times? Solana has gone down a couple times, and we need to be able to transact, and it needs to have high throughput. So, Maddie, what could you foresee? Larry Fink is laying out the idea of a blockchain here. What could you see the best blockchain that are meeting the prongs of what he's requesting here?
I think XRP, Algorand, HBAR. I think all of those meet very, very closely a lot of those requirements, both speed, finality, and just overall quality of tech. And the battle testedness of that tech has been pretty good over the last several years. In all of those vehicles, we also have a lot of growth on each of those ecosystems independently. I think that one of the things that we're going to see, like we talked about before, is that you're going to just see more competition pick up as the innovation moves on, right? So it's kind of think about right now we have like two big platforms that people build on, whether we're talking about mobile or your desktop, right? So you're going to be on OS, right? Like iOS, you're going to be on either Mac's platform or you're going to be on Windows, right? And with Windows, initially there's a lot of frustration, but as people start to build more applications on it, then that pushes back and it forces a more refinement and a greater refinement of the operating system in its whole, which then allows more applications to be built. So you kind of have this back and forth that creates like a better product over time. So I think that we're going to see a lot of, I would say pretty much everything in my portfolio is a long-term winner and will be used in some, institutional or a capacity on a much higher level. I think most of them are candidates for that. And that's really why I think that I become very agnostic to price in the bear market, because I know exactly the capabilities of all of these networks and what they actually are able to do. So I think that we're going to see a huge tokenization of the stock market, tokenization of the bond market. Again, that's a huge marketplace that sounds so boring to people. It's so damn important, right? And it's not just here in the US that people are buying treasuries. They're buying them all outside the US, right? In fact, China is one of the bigger holders of US treasury bonds right now. So again, just access, being able to dilute those down into micro shares, smaller bond amounts, whatever. You just create this incredibly liquid and fast moving marketplace. One of the things that I pointed to, even just chart wise, is like why the crypto charts look so different compared to the stock charts, and it's because they close so often, right? They close halfway through the day and then they close on the weekend. You're going to see charts probably move a little bit differently as a whole, which is probably a ramification that people don't really care about, but you are going to see charts move very differently if they're open 24/7 like the crypto markets are now.
Absolutely, Matt. So team, you guys have a lot of opportunities out there with networks that are looking to bring on institutions that want to tokenize assets. We are waiting on stablecoin regulation right now. And the continuation after that with regulation will make it clear where this is going to head. And I think will be actually change the exponential growth of that one chart, the Ripple and BCG chart, and will actually change that growth, because when more people can tackle into this realm and start tokenizing assets, and we can see start tokenizing real estate and people could buy fractional shares of a property, I think that's going to bring in a crazy amount of demand where now Billy Bob Joe, your neighbor, can now buy, into a hotel. It's like, oh, I own a hotel, and it's like, you're poor, so it's like, okay. So anyways, team, a couple of cryptos there Maddie talked about. Algorand should definitely be on your radar right now. Maddie said at the top there, hey, we have killed it on XRP and Hedera. We talked a lot about it last year. And now we've kind of backed off from talking about those assets because they're not in areas where we're looking to make great value buys right now. And so when people ask, we're going to say Algorand, or we're going to say, Hedera dropped below the 23.6. Start DCAing Hedera. Go ahead and do that because Hedera is priming up for one of the best blockchains out there and looking to bring on institutions for their Hashsphere, their private blockchain, and it will be interoperable with the public blockchain Hedera, and it's going to be very easy for institutions. Like Larry Fink said here, one of the problems is this compliance, and there has to be AML and KYC requirements that are met by these so institutions can interact with these blockchains. And so if this happens, what's stopping from BlackRock doing tokenized assets on Hedera? That's not confirmed. That's just me speculating here, right? So, team, a lot on the horizon here. Position your portfolios accordingly. None of this was financial advice. A lot of it was speculation, laying the groundwork for tokenized real-world assets, and maybe looking into the future, deep into the future, and saying, how can we position ourselves today with buying crypto assets and looking to participate in tokenized real world assets. So team, that's all we have for today. If you got something valuable here, make sure you leave a like. We'll be back for the Ask Maddie show 2:30 p.m. Pacific this Wednesday. So if you have any questions, leave them in the comment section down below and we'll be sure to bring them up then. Bye.